Everybody, good morning. Sorry, a minute late, 4 minutes late, whatever. Um, yeah, had a bot problem, and was trying to get that bot back up so that when the market opens, all the alerts for Apollo and Triple Threat and all that stuff flow like they're supposed to. So, anyway, sorry about that. Sorry about being a minute late. Hopefully, it's okay with everybody. Lieutenant Colonel Goose, good to see you. Logan, Donald, Dan, Rex, Joy, good to see you as always. Donald, Gaten, Gaton, sorry. Sergio, Cliff, Mad, good to see everybody. Amy, Ted, Frank, Jason, Will, Kathy, Mark, Darren, Diana, and all my other subscribers. And we got Sledge and Terry and Pauline and Be Like Water. Then we got Mark, Jan, Terrence, Diana, Jody, Laura, Kay, Merle, Daniel, Valerie, Mary, Anthony, Mark, Rosalind, Craig, Leah. Good to see everybody. Big news of the day, FOMC meeting. And hopefully nobody's surprised by this. I mean, the markets think that there is a near 0% chance that we're going to raise rates. Got a brand new flavor today, Blue Hawaiian. Pretty tasty. And see if I can not sneeze. Golly. Oh, there we go. All right. Jumping over. Out of sorts this morning. Sorry, everybody. Got a few things going on in the background that it's got my for those of you that came to town, for those of you that heard what I said, on when we were in the smaller group, I got something in the works to change something. Anyway, I got frustrated with something on Monday and taken action and made a big proposal, and we'll see what happens. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those, if you trade anything, really, there's a substantial risk of loss because somebody's going to try to make your money into their money, and you're trying to make some of their money into your money. Somebody's going to win, somebody's going to lose. And if you need personal financial advice, somebody to tell you what to do, how to make money in this world, in this market, you're going to have to hire a consult a financial advisor. It's not what I do. I'm just sharing stuff that happens and sharing ways I take advantage of it. But that doesn't mean that I ever get it right again. Sometimes I get lucky, but sometimes it's a complete dumpster fire, right there. It's a green dumpster, so sometimes complete dumpster fire. I should paint it red or something, or blue, so that it shows up on the camera. Yeah. Fed's funds rates, we're expecting to hold. Economic projections, statement, just expecting all that to just hold. Hold the line. This right here will probably be the market mover. Right there, along with anything that Trump comes out and says, if he front runs this. Right there, that will probably be, we'll get Jerome Powell's vision on what's going on and what he expects to happen and what they're waiting for. And that's where the market may respond more than the rate change announcement that we expect to just hold still. Expecting to hold at 4.5. And when you look at the interest rate charts, this one right here, DGS2, if you ever thought the Fed set the rate, welcome to the real story, the rest of the story, as Paul Harvey used to say. DGS2 is the 2-year constant maturity rate. The Fed is always chasing this rate. They chase it up, they chase it down, they're always chasing. Right now, we're in a period of holding right here. Right? They ramped up through it back here in 22 and 23, and then we held. We held. It looked like it, took a dip, and they were like, then it came back up, and they were like, and then it took a bigger dip, and then they started cutting rates. And then we started popping again, and they were like, uh-oh. We don't want to be the idiots that cut rates and then had to raise rates again, so they've been holding. These two are really close together right now. If the DGS2 had dropped on down. I mean, if it starts dropping below 3.5, they'll probably start cutting rates again. This is the real story. This has nothing to do with inflation, nothing to do with anything else, despite whatever they tell you in the media. It's all about this chart right here. Do you want to know what they're likely to do? They're likely to cut. I mean, likely to hold, excuse me. Likely to cut if we drop below 3.5. That's what I was trying to say. If we start spiking, though, if we get up above 4.5, they're probably going to have to raise rates again. This is the craziness. They got it a little tighter than I would. You know, if I was the Fed, I would have eased up on cutting back here probably. Been a little more cautious coming down. You know, that spike up we had right there at the end or beginning of January, that had me concerned that we were going to start ripping this off. Now, ripping off higher. The market pulling back has done a good job of pushing interest rates down, both of the bond market and the 2-year constant maturity rate. Money's fleeing out of the stock market and into safer assets. These are by no way guaranteed, even though guaranteed by the full faith of the government, blah, blah, blah. Yeah. But what happens if it blows out? I mean, what happens? I mean, it's always possible. Like people are like, nah, no, it never happened. Governments have problems, and you can believe what you want to believe. But this right here has 4 days and 11 hours till it updates again. Updates weekly. It's the 2-year constant maturity rate. If you're like, how do I make this chart, JT? Come to TradingView, type in DGS2, Delta, Golf, Sierra, 2, DGS2. Type that in right up in the top in the ticker box. Pop it up. You'll probably have to put your chart in line mode right there. And then how do you get the orange line? Right, that gets you the blue line. That's the DGS2. But how do you get the orange line? That's cool. You click on this right here. Easy peasy. Compare or add symbol. Type in FED, FUNDS, Fed funds. Easy peasy. It's an economic indicator. Right there. Fed funds, FED, FUNDS, Foxtrot Echo Delta, Foxtrot Uniform November Delta Sierra. Right there. Put it on the chart. Now, it'll probably be a little crazy. Likely it'll come in like this. And you'll be like, what the nuts? That doesn't look anything like it. You have to right-click on the price, or the price bar over here. Change it to regular mode so you get the actual percentages that these rates are set at. Now, I draw these orange boxes on here because they set a range, all right? 4.5 to 4.2, 4.25 to 4.5 is the range. So the rate kind of like, why is it at 4.33? Because that's halfway between 4.25 and 4.5. Right, they're in the box. It's a quarter point range. When they talk about cutting, it's a target range, all right? The rate that everybody talks about is usually the top of the range that the Fed's trying to keep this rate in. And they, when they do all their junk and, try to raise money in capital and blah, 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 overnight lending, they try to keep the rate for overnight lending in that quarter point range. It can fluctuate in that range. If you listen to Jerome Powell, he talks about a target range. That's their target range. So that's what they do. Now, I should shrink it just a little bit to make it actually 4.5. And we're probably going to hold still. And the next meeting, pop it up and you go to FOMC calendar. You just type it in. It's the Federal Reserve Board of Governors. That's the FOMC, Federal Open Market Committee. That's what it stands for. And you look at the calendar. Say, well, when's the next one? May, right there. Then we got this one wrapping up today. Next one in May. One after that's in June. They're about 6 weeks apart-ish. Why none in April? Because that's the way it just happened to land. 6, 7 weeks roughly. Then we got one in July. Then we skip August and have September and October. And then December. That's what we got cooking the rest of the year. Those are important days. The second day on there is the rate change announcement. That's the day that you should probably have an alert set on your phone that, hey, 2 p.m., or you can just come hang out with me and, I'll remind you. But 2 p.m. on those days, that's when the volatility is going to happen. And we even have, you look back at the past and see the notes and stuff like that. I think they even have 2026 already planned out here. You want to know what they're doing next year? There you go. Already planned out. These are almost always Tuesday, Wednesday, right there. Just in case you didn't know how this thing all worked. And this is commonly, we talk about this being the central bank rate in this country. This is the Federal Reserve. Federal Open Market Committee is the Federal Reserve System Board of Governors. We have, the Federal Reserve banks are actually broken up all over the country. We have governors, and then Jerome Powell is the chair of the Federal Reserve. So he's kind of in charge of this Board of Governors. Anybody got questions about how all that works, you can ask me. I'll do my best to answer. But there you go. All right. Moving on. So we expect this to hold. And, while they talk about a cut in July, unless this DGS2 rate makes a substantial change, I don't think they're doing jack squat. All right. They jawbone. They talk about these rates. We might cut a rate. We might do this. We might do that. And the market will react. But the DGS2 is an open market. It's an open market auction. The more participants you have, this is counterintuitive. The more participants you have in the open market auction for 2-year treasuries, the lower the rate goes. The more participants, the lower the rate goes. The more money willing to buy 2-year treasuries, the lower the rate goes. It's an auction. It's reversed to like an eBay auction, where the more participants you have putting more money in, the higher it goes, the higher the prices. The more participants you have, the more people bidding on these, the lower it goes. And if this drops below 3.5, I think, or we even take here's the alternate, or we take a spill on down closer to 3.5 and just kind of hover down here for a prolonged period, which this thing doesn't just kind of sit around unless we're at the bottom. Usually it's trending. Occasionally we take a prolonged sideways. Usually it's moving one way or the other, moving up, moving down. You can look at the whole history of the thing. Sideways is not really something this DGS2 likes to do. We're looking at the blue line. If you thought the Fed set the rates, welcome to the truth. Anyway, the market sets the rates, as always. The real rate, 4%. Fed rate, 4.3. We'll see what happens. If DGS2 starts breaking down, like I said, we get below 3.5, that could support more cuts. At least another quarter point cut. Down to 4 to 4.25. If we break down below 3.5, we'll probably see bigger cuts come into the market. Now, if for some reason this starts rallying, breaking up through 4.5, the top of the Fed's range, they've got a little cushion there. If this starts rallying up through, they're probably going to raise rates. Now, rewind all the way back to, when did I say it? It was like January 2023, I think. We were right here. We were right over here. I drew this line and I drew this line. Now, I wasn't really trying to guess time when I drew that. But as you can see, this kind of topped out and stopped. We've been hanging out right with where I put that line. This over here, I thought they should quit raising rates right there. They kept going 2 more and hung sideways. I think they went too much right there. I think they put extra pain on the economy. And what happens? The rate raises take 2 full years to trickle through the entire economy. Right there was the mistake. What's happening right now, 2 years later? The pain. We're getting the pain in, the stock market, the pain in the economy, seeing slowdowns. That was the mistake. It took 2 years to actually happen. They should have stopped right there. Should have stopped right there. Now, what happens next? That could shoot up higher while economic activity is dropping. And we have to raise rates. I don't know. I speculated that the real financial crisis may happen up here at a higher level. That's going to put the hurting on a lot more people. Everybody's crying about interest rates and mortgages now with that just barely up off the lows. What happens if we ramp it to 9%? We haven't been there since the late 80s. I mean, I didn't even understand money at that point. That could be crazy, right? This US 30. Where is it? It's not the one I'm looking for. Gosh darn it. It's not the one I'm looking for either. Let's see. No. It's mortgage US 30. That's it. Look at the spread on that baby compared to DGS2. Anyway, wild, right? So you got to be, that's it's like Goose says. This is why the secretary's focused on keeping that 10-year down in the long haul. So this isn't, this is not a chart I watch every day. This is just something I check in on at least once a week, just see how we're going. I mean, we only get an update on DGS2 once a week, right there. And you can look at the 10-year, you can look at the 5-year, you can look at, talk about the spread, and this and that and the other. It really boils down to this one right here. All right. This is the closest one. If it starts breaking higher, we're going higher. If it starts breaking lower, the Fed's going to chase it lower. I mean, that's the bottom line here. It has nothing to do with inflation, nothing to do with anything else. It's all about these two rates and how far apart they are. If anybody thought different, welcome to the truth. This is not the truth anybody tells you anywhere else, I don't think. I mean, I've heard a few other people talking about it, but certainly not a mainstream media topic right here. So let me know in the chat if you appreciate that, deep dive into that, if I cleared up anything for you that has been muddy before. We have the Morning Monster list. It is not a big, long list today. Kind of holding, waiting in anticipation of this FOMC meeting later today. We got a small pullback yesterday. I would have thought the world was on fire. Even some of you, the way you responded yesterday, I would have thought that we were burning it down. 2 big days up, a little bit of pullback, and hair on fire. Oh my gosh, are we going down lower? I even had another guru that doesn't work with in the same company I work with, but messaged me and was like, do you think you're going to be wrong on the bounce? I'm like, no, I don't think I'm going to be wrong on the bounce. I mean, this just did a 50% retrace here off the lows. There's the low. There was the initial high right in the resistance box I drew. I mean, come on. Resistance, retrace. Now, the big question is, though, what happens today? If we bust down below these levels, I'm just looking at the cash index, 5560. There's the opportunity to go lower. opportunity of the market. The 3-day roadmap line would be the target. That is down here around 52, 5,300. If we're going to break down today. FOMC meeting, while I cannot predict the reaction, I'm going to outline what it is I'm watching to know if we're going higher or lower for the next little bit. Here's the major resistance zones. That high, that roadmap line, that, and that. That's a huge pile of resistance right there. Giant red zone of resistance. Does that mean we can't go higher? No, it doesn't mean we can't go higher. It just means we're going to have a tough time pushing that through unless we get some ginormous ramp that takes us about 300 points higher. Could we do that in a day or two? Absolutely. We could push the FOMC meeting could push it up 200 points this afternoon. Then we add a little extra tomorrow, and then we're set to go higher. Is that what I expect to happen? No. Based on the last few FOMCs, we might not even really move at all. We may just get a little blah, possibly breakouts, and then we have to grind through this crap for the next month before we can break on out higher. It's entirely possible. Seasonality-wise, we are at a point in the year where we typically make a bottom. This looks as good as any, like a bottom we should hold. Right there. Beautiful. Hit the 618 retrace, held, reversed, made the initial move up. Let's get some continuation. Love to see it. This could be the bottom we have out through the late summer, early fall. We may go higher from here for the next 6 months, maybe even 8, 9 months. Now, if we get to 6,600, this is big picture stuff, big picture. Here's the resistance right here around 5,900. That's the level we got to clear to set the runway to clear it up for 6,600. Now, we could stop at 6,250. We could stop at 6,300. We could stop in here at 64, 65. But 66 is my ideal spot, and I've been talking about that since we were at the lows in 2022. For those of you that have been following me, a few of you were paying attention all the way back here. And remember, when we were coming off the lows right here, everybody was like, how high could we go? I was like, I wouldn't really expect higher than 6,600 on the next big move up before we do a big correction like we just got through. This little correction, the last month, peanuts compared to a prolonged correction. That was a peanut move right there. Big baby. Now, this could, we could have made a top right there in February, and it could lead to a bigger down all year. It's entirely possible. That's why we got to watch the resistance. If we come up to there, turn back down, this can start off something that gets bigger to the downside. I still expect below 4,000 before we go above 7,000. Below 4,000 before we go above 7,000. That's what I expect in the market. That's a bigger correction, right? We haven't had one, despite this seeming like a giant correction and this being a flash crash. We haven't had a big correction in a number of years. We're talking about a big outsized correction. Been a number of years. They come around the market. This is a market cycle. That one right there, 35% down. Bring that up here, 35% down. That's a scary number. Minus 2,000 points. Just remember, we're going to do another one. It's going to happen. I think it comes from 6,600. It doesn't have to. You may remember this one? 57%. That's more like what I'm talking about. That was 07, 09. 2-year prolonged pullback. We're probably going to do something more like that. You may remember this one. Cool. I love how that pops up every day. This one right here. 50% pullback. Anybody remember that one? And these both, just to tie this together for you, look right here. There's the first one. I mean, there's the first one I talked about. There's the second one. This was the 57% pullback. When the orange gets above the blue, we typically have some sort of market panic. When the orange gets above the blue, have some sort of market panic. This was 2001 time frame. This was 2007 time frame. .com. That was housing, great financial crisis. Here's the surprising thing. This is why I knew COVID was coming. Look right here. I didn't know what was going to cause the market to panic. COVID happened right there. Telltale sign. When the orange gets above the blue, this is why this chart is so important to me. And the fact that orange was above the blue for a really long time. And I think this was a policy mistake. And I think it's going to cause a market panic sometime out here. This year, next year, maybe from a higher level. And they're never exactly the same, right? Never exactly the same. Always a different story. So what's the story this time? Maybe it does that. That's why I started right here talking about this. Something to keep an eye on. Something to keep an eye on. But how do we make money today, JT? How do we make money today? Let's go look at the futures, see what the overnight action suggested. That's interesting. Colors the... Well, that's new. Color the overnight session. Anyway. Futures just kind of hovered all night. Didn't really break out, didn't really break down. We did a correction. I outlined where I thought we would hold yesterday with the 30-minute roadmap line. Thought we'd go retest 30-minute and the 1 hour, I do believe. Both of those right in the same vicinity. I thought we would retrace and retest after breaking up for, we went on a nice 2-day rip. Found some exhaustion. Came back down. Holding that zone. And as I speculated last night during 30 minutes of awesome, I thought we'd just hold, which we did overnight. We just held right there in the chop. So we're going to wait for 2 p.m. Unlikely to make any kind of big move here. Now, this 618 is a tell right around 5,700 that we might go higher. 5,750, 5,760. Possibly test into this zone right up here. And that's where the 4-hour and the daily are kind of hanging out up there in that orange zone. Important levels. Other people, other gurus, talk about the 200-day all the time. I like the 144 EMA. That's part of the roadmap line. If you don't have the roadmap line, link is in the description. You can get it for $5 whole. Super easy. And if you're just like $5, I don't got $5. I'm trading the markets. All my money's tied up there. Cool. Click my homepage, my channel homepage, right on my logo right underneath me here. Click that. Go to the homepage. Watch the video I have pinned to the channel. Right there, gives you the code, gives you everything you need to get started. All for free. You don't even have to buy it at all. Just type in the code yourself. If you don't know how to code, that's why I have the $5 link. Easy button right there. I'll make it easier for you. But if you're a DIYer You get that code, put it on your chart, watch that video, learn how it works. Works the same on all time frames. Whether you're on the daily chart, the hour chart, 4-hour chart, doesn't matter. Doesn't matter. Same way, same pattern. I've built systems. I've tested it. 75% likely when you do the pattern, when you take the conservative entry on the close above the 618, you're 75% likely to get to the 1448. We've proved it out. That goes above and beyond what I said, the training I have in the video and the training I have in the masterclass, but we've proved it out with actual numbers now. I have automated systems that fire these off when they're ready to go. It's what the Apollo is based on. It's what Triple Threat's based on. It's what Echo Trade's automated alerts are based on. It's what the daily chart setups that are only available for the Termar Trading Lab members. It's all based on the same pattern. Same pattern. If you're like, all right, JT, what the heck is this pattern you keep talking about? Well, let's pop over here. Let's go to a clean chart really quickly. Let's talk about the pattern. So we have, I'll just crash course here real quick. Have a move up, right? And, on a reversal, we can rewind all the way back over here. When we get a bust up through the roadmap line, at some point we'll reach exhaustion and we'll do a retrace to the roadmap line. Works on all time frames. All time frames. Take your fib tool, you run it from the high to the low. When we get the close above the 618, that's the conservative entry right there. Wasn't right there. We went lower low. Wasn't right there. We went lower when we came back down. Right there we got it. That's your entry. That 75% likely target right there. Low and hold, we hit it right there. Boom, right there. This target, 70% likely. We hit that a few days later. This target, on the big scale, thousands of tickers, it drops down to like 35%, 35 to 40% likely that we just go on a rip from that 618 entry all the way up to there without coming back down. So there's a big drop off in the likelihood from right here to right here. Be careful. That's why I'm always looking for reversals after we hit this. It's like a 35%, I mean, it's almost 50%. If you make it to here, you got a 50% chance. That's kind of a coin flip that we're going on up here versus coming back down here. Right there. So when we go look at the current price action, we've got another one of those, right? We did the pullback. Went a little deeper than maybe we'd like to see, and that's why the 3-day is possible. 3 days right there. It's not a far, it wouldn't be a stretch. Works the same on every time frame. 3-day, last time we hit it, back here in October 23. August seemed like a horrible correction, but hardly got halfway there. Went on higher, came down, probably rally up. And if we bang our head on that 618, if you want to wait for the conservative entry, wait for a close above that level right up there. 59, say round it up just a little bit, 59.25. Get above that 59.25, 59, maybe 59.50. We'll be a little extra conservative. Wait for that close up there. Then 62.70 becomes very likely. Like 75% likely. We've proved it across thousands of tickers. If you've been around, this is like, I've been working on this for a long time, and we finally put numbers to it. Real solid tens of thousands of trades. Right there, high probability move once we get above that 618. Very important. This works across all time frames, all tickers, right there. Now, looking at NQ. Same kind of pattern, same sort of thing. Kind of sat still all night. We got the move up, off the low, got the exhaustion, came back down, tested the 30-minute, went a little deeper, tested the 1 hour, went a little deeper. It's just, this is the one that concerns me, though, because we're hovering underneath. Its price action is below the roadmap line. ES is above. That looks more positive. This makes me a little more nervous that possibly the initial reaction on FOMC might be down before we pop. Possibly. Russell here. Look at that. Strong. Busted up through. Retrace. We've already got that target. Works the same on all time frames. All tickers. We're in the target zone right there. Could push it just a little higher. Then likely to retrace again. All right, like that. Oil. Pop up to the daily. Take a look. Very concerned right now. I mentioned this last night. We broke down through that uptrend of lows that we've had intact for a good long time. Came back tested it yesterday. Rejected hard. If we get below somewhere around 65.50, we're probably going for a lower low somewhere down here in the 63 area. When I say lower low, I'm talking about rewind all the way to May 2023. And we're probably going to dip lower than that low. Right there. Now, when you saw headlines that oil made the lowest low that we've had, since COVID, that was on Brent. All right, that was European priced oil right there. It did make a lower low than anything we've had. Those headlines came from Brent, not from West Texas Intermediate. CL needs a little flush lower to clean up this chart. Need to flush it down below that low we had back here. So if anybody was confused why the headline said we've, back here that we flushed the lowest prices we've had in, 5 years, I think it was, or 4 years. It's because Brent, not because CL. I think it was the lowest price in 3 years. A little bit of a misnomer there. It wasn't for West Texas Intermediate, WTI. Cushing, Oklahoma delivery, it wasn't. London delivery for Brent, it was. And that's where those headlines came from. Came from right here. Gold, still grinding the high. I'm on pullback alert. This 1, 2, 3, 4, 5 can be complete anytime, and we can get a big, deep 50% retrace, take us back down to the daily roadmap line. I would be very cautious being long gold right now. Bitcoin, oil has nothing to do with gas prices. Distillation facilities and demand has to do with gas prices. They trade independently. RBO, let's see, RB. That's just RB. It's RBO on my trading platform. RB. This is gas prices. They're not hanging out at lows. We have a shortage of distillation facilities in the United States. That creates a shortage of gasoline. That can go higher while the actual prices of the feedstock are at lows. Blows people's minds that it's not tied directly together. We've been closing distillation facilities in the United States. They've been outlawed from refurbing themselves. If you can't get the permit to refurb the distillation facility, what option you have? Close it. You can't still run it. It's broken. It costs too much. Whatever. So as we've reduced the number of distillation facilities, when we break above the 618, we're probably going on up. And this may be a setup to take this up to epically higher prices, like $3 a gallon. This is wholesale prices, not pump prices. You add in all the taxes and local taxes and federal taxes and all the other taxes and profit for the gas station to get the actual pump prices. complicated, right? It's not as simple as the media makes it all sound. Got to be careful out there. Nobody's watching your back. Hopefully, you come hang out with me. Make sure you subscribe if you love the information I'm giving out. Diesel fuel, this is heating oil. This is diesel fuel. Different story. We're actually down near oil. We kind of did the same sort of thing. We got a little uptrend of lows going, broke down below, back testing. So diesel fuel could actually go lower while gasoline goes higher. And we haven't seen that happen in a lot of years. A lot of years. Bitcoin still hanging at the roadmap line on the futures. Still hanging below the roadmap line on the spot market. I need this to get above that level to go bullish. Same pattern as like the S&P, same pattern as the NASDAQ. Big resistance at the daily and at the 618, which just happened to be where we consolidated for like a month. Get above that. We're set to go higher. If we reject off of that, time. I am long Bitcoin exposure, maybe more than I should be. It's going to hurt if this breaks down. I am fairly confident we're going to break through and go higher. Nothing's guaranteed. If we start breaking down below the high we made before halving last year, right here in March 2024, if we start breaking down below that high, it's time to trim the sails because we're probably going substantially lower from there. As a key high. Very key. Ethereum, nice, strong potential reversal cooking here. Got a lot of work to do to get this bullish, but I like that candle. I like where we're going. If Bitcoin, this is for the spot market, not for the futures. If Bitcoin and Ethereum can both put up 3 green days in a row, we usually kick off a rally that'll last for the next 2 to 4 weeks. So I'm watching Bitcoin, and this is daily chart candles. We need green candles, consecutive. You can't skip a day. Can't be like, green, green, red, green, green. Can't do that. We got to have green, green, green on both Bitcoin and Ethereum on the same days. If we do that, we typically, looking all the way back through here, we typically kick off a rally that lasts 2 to 4 weeks. So watching these closely. NKD, right there. If we can, we're cracking into the box here. If we can get that rally up to the top of the box, break out the top. This is an indication of global liquidity. One of my other measures of global liquidity has been increasing the last few weeks. That usually happens about 2 to 4 weeks ahead of Bitcoin, which happens about 2 to 4 weeks ahead of the market ripping higher. Typically. Anything, there's exceptions to the rule all the time. Bitcoin typically starts moving 2 to 4 weeks before the market starts ripping. So that's another, start watching NKD. If we start ripping here, we may spill this over into Bitcoin, which may spill it over into the S&P. We could have churn a little bit while we work through this until Bitcoin starts moving and then the market follows. There's just some general market guidelines on how this stuff all pulls together. Now, I go pull gainers. Things moving $2 or more up in the pre-market. Put them on the gainers list. I grab things going down $2 or more. Put them on the decliners list. We build the list. And we take a look. And for some reason, that's not the first few of those are not supposed to be there. I'm not sure why they're sitting there. It's like Docu is not. That one was on the list. That was on the list. That's not the list. Those were there yesterday. I'm not even sure what's going on. AGRX. Look at that. Potential bounce. Even those pharmaceuticals, and I don't typically trade biotech pharma. Don't typically. That, that's not. I won't trade them. I don't typically. If we get the daily close above the 618 level, which is right where we're in the vicinity of, right here at that 631 area, 631. Get the daily close above that. Potentially have a setup for 694. Remember, that's 75% likely across all tickers. This ticker specifically, how do I know? Guess what? I got a tool. I can pull it up. This ticker has a 66% historic win rate. So, but that's only on 6 trades. 6 trades is not statistically significant. 30 is a statistical population. So this is kind of a maybe it'll work, maybe it won't work. Do you go with that bigger historical win rate? This, what that means is this ticker hasn't oscillated enough in its history since it started to give me enough to give me 30 trades. Right there. So it may be, and that lower likelihood to work out means that sometimes these are, new tickers, new things that get listed are sometimes more volatile and more likely to fail than they are to get continuation higher by trending. Sometimes we see that. Some tickers don't trend. Well, if you've been watching me for very long, you know that sometimes some tickers are just a choppy, hot, sideways mess of a ticker. Those are more likely to fail than the ones that go on trends. Overall, across thousands of tickers in the last 40 years, the average ticker, average across thousands, will trend up and complete the robot pattern. SIG, I kind of speculated we would see a bounce. Happened really fast though. Speculated we see a retrace and then come up into the roadmap line. Looks like we may do that faster. We could get there faster. Key levels to watch, the gap. Large gap down right there. It's a key level to keep an eye on. We get up through it. We can look for a retest of the roadmap line and a breakout higher. Tesla, nice bounce, still in the danger zone. This is support right down here. This is resistance right up here. We're in between, and as long as we're in between, I expect more sideways. It's the long and the short of it. We break up above the resistance, we're going higher. We break down below the support, we're going lower. That's the long, that's the short. MSTR, nice little bounce on Bitcoin recovering. Here's the thing. If we break above this trend line, here's the resistance, that 618 right above us, sets up the potential to go on up higher, 640. Now, they have introduced 2 preferred shares in the last few weeks. 2 different preferred shares, and they have tickers. Tickers that are different. It's kind of interesting. Pull up and let me see if I can pop this out. Pull this up. There we go. This is off X right here. MSTR versus the preferred shares of Strike, STRK, and STRF right there. This is MSTR is the common stock, STRK preferred stock. Upside exposure to Bitcoin. The main stock has the highest exposure. This one has a medium exposure, and this one has a low exposure. This one pays no dividend. This one pays an 8% per 100 share annual dividend. And this one pays a 10% per $100 share annual dividend. Paid in cash. This one's cash or stock, and this one's paid in cash. Volatility, high volatility, medium volatility, low volatility. That's the goals here. Voting rights, yes, no, no. Conversion features, this one's convertible to stock at a 10 for 1 at $1,000. This one has no convertibility. Priority and liquidation. This is the above common but below debt. Above common but below debt. I think this one actually sits above this one. This one was the new one this week. And then this one's the last to go. if they get if they go into liquidation. Be careful out there. If you want lower volatility exposure to Bitcoin, STRK, MicroStrategy, 8% annual perpetual strike. And then STRF is the other one. STRF. Yeah, it just got announced yesterday, so it'll be, it's not even listed yet. Right there. It'll be coming. Coming soon. Oop, that was crazy. Whatever I just hit. All right. LSC. Nice little pop. This looks like a SPAC. I mean, it looks like a SPAC. I'm not sure what the devil. Maybe that was some sort of potential buyout, and then it failed, and then who knows? Looks like crazy. That's some crazy price action and danger. That's what that says to me. App. I see a chart like that, I'm just like, move on. Like, that's just too much. Too much being crazy. App broke through the roadmap line, back tested. We can break on up through the 618. Get that continuation upside 585. The 61.8% retrace sitting there at 387-ish. So we want to close above that to set up the high likelihood move to 588. Oil is natural gas. Potential for this to retrace back to the roadmap line based on seasonality. Somewhere back around the 340 area. Typically, we get the big dip in natural gas this time of year. Historically, I mean, the market's already got it priced in for the next decade. We pull back this time of year. ADSK. Potential. Oh, man, look at that. We hit the downside target. Beautiful. First move down. The retrace to the 618. Next move down. Right into the target zone. This could be a really strong trade. Right here. Let's just clean up the charts. That high. This low. You could buy now. Stop out down here around 240 or so. Or you can wait for the conservative entry above this level right here at 293. We get a daily close above that. We set up the upside potential with a high probability fashion, 77% likely to get 340. Go look at the statistics here. That one works 77%. Look at that, 77% of the time. This one works. 40 trades, and like I said, this one has statistical significance and actually works out a little better than the average at 75%. That worked out right back here in August, September. Been waiting for the next setup. Kicks off above that 293 area to move on up to 340. You could buy now. That's aggressive buy. I would stop out on a breakdown below 240 if you do that. How long might it last? It could last a little while. It could. Could last a little while. Got to be careful. The average duration is not shown on here. Why they changed that? Used to show that. Wonder where that number is now. Probably. They changed the numbers. Oh, gosh, love it. Wonder why they took that off. I'll have to look at that later. Anyway. Moving on. Coinbase. Line in the sand is at 172. Long as we stay above that, we've got some upward pressure still. Major resistance at 240 area. And then 240 to 270 is major resistance. We get above that zone. We set up the likelihood we're going on up, 387, and maybe even kick off the bigger potential to 540. Shopify. Potential bounce. This is actually really nice right here. I've made a bunch of money on Shopify in the past. Get the daily close above 112. Looking for 137 on the upside for the next move right there. That move right there. Daily close above 112, 137. High probability move for Shopify. Baba consolidating right at the highs and probably going to extend on up into the 160 to 200 area for Alibaba. Ollie's bargain outlet here. Hey, that looks, we've got this bigger correction that we did. That bigger correction with the 618, we had a lot of trouble getting through it. We pushed through it, kicked it off, likely to go up to 144. This little baby daily bounce, this is a much bigger, that was a much bigger time frame pullback right there. This one right here, likely to kick us on up to 127, maybe even 138, which is really close to 144 on the bigger picture move. It's even bigger than that. It's probably a weekly chart, maybe. Looks like it'd be a monthly chart, but there's not enough candles. So, weekly bounce, take us on up. Maybe even get up to 250 on the weekly chart. Might take a while, though. Might take a couple years. DoorDash, potential bounce. We get above the 195 price. We can see 220 as the target. High probability. Roku, another bounce potential. There's the high. There's the low. Break back above 88. Set up the high probability move to 112. 112. WSM, Williams-Sonoma. You can see that one worked out back here. Beautiful. Now we've got another retrace. This high, this low. Break back above the 189 area. We set up the 233 target. Lots of awesome opportunities out here today. Decliners, ESLT. It started out, these are things that were dropping $2 more than pre-market. As I said, that's getting up to extreme levels. Not sure I'd expect much more than 400. I mean, we could get 460, could get 690, but the higher we climb on the fib ladder, the more likely it is to get a violent, fast retrace. It's like Icarus flying too close to the sun. You melt your wings, and the market is not kind. HQY, which is health equity, getting slammed a bit. We kind of poked out of the box that we hadn't been out of, gosh, for the last 6 years, 7 years. This is one of those just goes sideways, and it's been going sideways for a long time. I mean, we started this range back here in 2016. So it's been going sideways for almost a decade. Poked out of the top and then getting slammed back down. Not what I call a smoking hot opportunity. I would be very careful chasing that one. PGR progressive. Nice ramp to all-time high. And we might see that come back down. We got that big slam right here in hurricane season. And then we ramped it up to new highs. Just shows you. It's about sentiment and price action. This is probably topped out for now. I would expect it to come back down to the roadmap line to present the next opportunity. RGC. It's a biotech, just choppy. You can see last time it did a big pop, we came down back all the way back down to the $3 area. I would be very careful touching that. That's like playing with nitroglycerin while you're soaked in gasoline, and also playing with matches. ETHD at the resistance level. This may roll back down. This is ultra short Ethereum. If Ethereum is popping, this is dropping. This can easily go blasting on down on a reversal in Ethereum. GDS looks like we're shooting for the roadmap line right down here around 23, 24 area to the downside. TSDD. And as I said the last couple days, this may need one little spike to hit that roadmap line around that 95 to 100 area and then roll off. Be careful. This may not do it. Things that are leveraged. This is 2x leverage short on Tesla. Things that are leveraged don't always follow the patterns. But this may tell us that Tesla stock may need a little downside before we can find the bottom. So that's it's hard to know if this is the tea leaves telling us we need one more little pop on this chart, hit the roadmap line, and then roll, or if it's just going to miss and roll. I don't know. Can't say for sure. TSLQ, same situation, same story, slightly different roadmap line at 72. Same 2x short on Tesla. TUR, this is an ETF on Turkey, and Turkey does not look too hot right now. That high, that low, resistance right there at the 50% to 618% retrace of that high from May 24 to the low in November 24. Rallied back up to that just last week. Today, getting a giant drop, and this looks like we're going lower. How much lower will be the target? Take the fib line, run it from that high to that low, back to the current high. It looks like 28 would be the downside on this right here. We're going to shoot for a downside somewhere in that 28, 27 area on Turkey. TUR. General Mills, hunting for the bottom. Not sure we're done yet. This could get some continuation lower. Sour grapes on cereal, it looks like. That first move down, that retrace. Next move down could take this to 50. Right down in there. I would not be surprised to see that. Also would not be surprised if we reversed from here. No high probability setup at the moment. Now, looking at back, bigger picture from the low in 2018 to the high in 2023, that 618 retrace would be right around 52. Would not surprise me one bit to hit that and set up the bigger upside potential. If we did hit that 52 area, turn back higher, it does set up a bigger potential pattern to go higher. That high, this low, somewhere in there, just spitballing. This would set up, since this is bullish, this would potentially kick off the move to this upper end of the range, 150 to 215 potentially. And consider that right there, that's a 3x to potentially a 4+x on the price right there if we dip down in that 50 area. Talking about 4x return, that could be worth buying a few shares. So these are the kind of opportunities I like to wet my whistle on. So I'm going to set an alert right down there at 52. I may pick up some shares in one of my long-term retirement accounts, looking for that kind of opportunity right there. I mean, 400% on shares, that's pretty sweet. I'll wait for it. I mean, it could take a decade to get there. So, GILD. And we hit some resistance, coming back down. Probably going to retrace the roadmap line somewhere around 95, 96. And last but not least, THO. Everybody thought this was going to be rocking and rolling. And back down. Let's see if that high, 1, 2, 3, potential for that correction to be done. Potential, but when we look at the bigger picture here, this high from back here in 21 to this low here in 2022 to this high right here in March of 24 sets up the potential downside pressure to 57 area right there. I'm not sure this is done on this correction. This may be a 1-2. This could extend it on down a little bit more. We get a wave 4 correction up into the, when I say this could extend it down a little more, when I'm talking about this move, this move, this move, we could see prices on down to 66 in the near term, bounce back up to possibly 82, and then the final flush on down there to 57. That looks like the path of most likeliness to me, and this may bounce off the roadmap line over here when we do that move. This would be a prolonged, probably, correction over here before we went down further. I'm not sure this is going to be very investable for a while. Be careful out there. All right. I've got a joint live stream planned at noon with a bunch of other gurus. I have just a short little bit in there. And then for channel members, I'll probably start up a live stream for the FOMC meeting. Sorry, that's channel members. If you want to be a part of that, it's like $5 to be a channel member. It's not even expensive. Support me and what I do here on YouTube. It's separate from what I do with the company. Have a great day, everybody.